NVIDIA is plummeting. This is a core.
Hey, you're finally awake.
This is a core part of SPY and of a lot of people's portfolios, including my own. How do we make money on this though? Without knowing the directionality, how do we actually make money on this without gambling?
You suck.
The answer is options selling, specifically cash secured puts. Check this out. Hey, I'm Dr. Dumb Money. I have no idea what I'm doing. This is not financial advice. This is just stuff that I will be doing. At least I would if I had money for it. Check out NVIDIA's dip after, let's see here, dip after a deep seek, and then a dead cat bounced, and then a dead cat bounced again. It's just trying so hard to get out of this. And if we pull up NVIDIA on our trading view, we'll... I'm sorry about all the lines, but this is music to me. The chaos makes sense in my brain. So this is when DeepSeek, the news about DeepSeek came out. It just absolutely plummeted overnight, and then we've just been chopping ever since then. No real direction of this move. I mean, maybe you could argue that we're trending upwards, higher lows, but then we've got lower highs. So who freaking knows? We don't know exactly what's happening. Would I be willing to bet that a huge company like NVIDIA is not going to go to zero because some competition came out?
Yes!
As long as NVIDIA is not going out of business, that's all I care about. So again, without gambling on options here, I'm an options seller at this point. I am also a gambler. I've got a mean gambling addiction, but I am primarily an options seller now because it's tremendously safer. This is an excellent time to sell a cash secured put anytime a stock dips. Because assuming the stock's not actually going out of business, it's unlikely this trend will continue. I guess retail got scared. I have no idea why. It doesn't make sense. Why would DeepSeek put NVIDIA out of business? Whatever. So I don't think this is a permanent downtrend. NVIDIA over the past 3 months, check out the volume here, within 70% of all the trading volume. Big green line here would be the low of that 70%. Red line would be the high. I like to think of these as buy and sell signals, or for me, option selling. I like to think of this as cash secured put territory and this as covered call territory. And you best believe I put some covered calls up here and I made profit on those. Yes, I lost on my underlying because the stock moved down like 30 points. But I protected some of that with covered calls. I protected some of that loss. Now that we're under this green line, I think this is prime put selling territory. And if you want to own NVIDIA, this is a great time to sell a put. Also, check out the IV here. IV was super high. If you got in a cash secured put right here, you got some crazy premiums. I know this was going for like 500 plus. At the money. So this blue chart here, this is my historical historical volatility. You can see the IV was enormous. It went up to 75 from 7. That's huge. That's a 10x. And then we've died down to 30s now. It's still higher than it has been. So I still think it's a good time to sell a put. The question is, what strike? What expiration? Since we had this big red move, I'm anticipating a rather quick return upwards. So I'd be willing to bet that we'd probably be pretty safe to sell at the money here at the 120. However, if you want to be even safer, now's a great time to sell even lower, and you are very unlikely to get assigned. At least I think so. So in order to pick the expiration, honestly, I like to pick the strike first. I think it makes more sense because if you go farther out of the money, you're going to need to go longer out in time to make that worth your while. So I go with the strike first. Again, I think 120 would be reasonable. We're at 120.07 right now, so you could sell this. And if we pull up Tasty Trades, which is my preferred platform, NVIDIA for this week, 120, you can collect $455 for $4,700 of collateral. You can do this on Robinhood as well, and I'll show you the difference there. Versus on Robinhood here, if we were to sell a put for this week at the 119, well, okay, so they didn't update quite the same, but if we did the 455, then we would need 120. So, right, our collateral now is $12,000. And that's why I don't use Robinhood for my option selling account, because they don't give you any leverage on the collateral, unlike Tasty, and I imagine some other brokerages do as well. So we're gonna continue this on Tasty Trades because That's where you get the most bang for your buck. Okay, so again, you could do the 120 if you want, collect 450 bucks for $4,700 collateral. That's about 10% return in a single week. Absolutely crazy. Or if you want to be safer, then we can come down. And it's all about support and resistance, all about trading psychology. So right here, this seems like a good level of support, 101. Down here, 91, up here, also around that 100 level. And then the volume profile is telling us right here around 90. 90 is probably super safe, if I were to guess. And what kind of a move would we need to hit 90? We would need a 25% downward move from here. 25 more percent. What is that from where it began? I guess it started up here, right? So start from there down to 90. That's a 40% move. And actually in 1 week, over 2 standard deviations away, because the volatility is so high this week, you can do this. 99.5% pop, you collect $18 for $1,800 of collateral. 1% return in a week. This is a little too safe for me. I would prefer a little more collateral than that. So I'm gonna look at any other options here. So from here, we can go up to this little spike at 95. There's really nothing above that until 105. I would think 100 is probably going to be better. So I'm going to come down to 100 and we'll check that out. So 100 is $44 for $2,800 of collateral. Now I think that comes up to 1.5%. So it's a slightly better return. Like, oh no, I'm getting 1.5% returns per week with a 96% likelihood. What's 1.5% times 52 weeks? It's like 72%. Yeah, 78% ROI if you annualize it. So that's an awesome return as a seller. And again, if you're doing this on Robinhood, you need 10 grand. You can do 5 of these contracts. Oh, interesting. It's not linear. Okay, no, I guess you can only do 2 contracts at this strike. That's so weird. Can I do a third one there? No. Wow, that's weird. It's not linear at all. It doesn't just add up. Okay, well, you can do 2 contracts, whatever. It's still better than Robinhood. We've got our strike, 100. That's really safe. And that would be pristine place to actually get assigned on NVIDIA too. Like if you care about NVIDIA and care about having it in your portfolio, 100 is awesome. Even I think 120 is a great price to get it at. So we've got our strike. Now, how much money do we want to make? Well, we've got earnings right around the corner here. So why don't we check out, I'm going to show you the February 21st versus the week of earnings. Volatility difference, 69%. Nice. Versus 80% the week after. That's a big volatility difference. And you're going to see that in the strike prices or in the premiums. So $133 for the week before earnings versus $267. Double what it is with 1 extra week because of that volatility from earnings. That's crazy. So again, I think this is going to be a quick bounce out of 120 away from where we're currently at. I think it's going to swiftly start moving back up.
Nope.
And even if it doesn't, well, we're options sellers, not buyers. So it doesn't matter. We still make money off of time. So I want to go with the week of earnings. I'm going to take this extra premium for just 1 extra week. I think that makes total sense. And it's NVIDIA, so people are probably going to anticipate that it's going to rise after earnings. It might not. It could fall, or it could chop, or it could rise a little bit. Either way, we win. As long as it doesn't come down another 25%, we won't get assigned. And even if it does, we get NVIDIA at a price that we like. So I would pick the 100 strike for $2,800 of collateral in 1 month. And that is almost a 10% return in 1 month. And that's a pretty safe one too, with an 80% chance of profitability and an 89% if you're going with the P50. As soon as you hit 50% profit, you close this position, there's an 89% chance of success doing that. That's how to make money when NVIDIA is dipping. Like and subscribe if you enjoyed the video, and I'll see you next time.